Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this, I think we have Monday. I hope you all had a great weekend, and I wish you all a great start into the new trading week. Now, as always, before we jump into the markets in my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are linked in the video description down below. And the one thing I can truly recommend is, if you haven't done so, is go and check out the Elliott Wave Principle. You can read this wonderful book online for free when you use the link that's in the description down below. Now, with that said, if we jump into my portfolio, we can see that we have another break even starting to the day with a slight green touch to it. As always, up 1 second, I'll have to actually change something. Looks like we have upload issues. 1 second. Terminate, yep. There we go. So that should address the upload issues that we're having. Yeah, so that should fix that. Now, as said, just to be sure, because in case that was cut off, the disclaimer for this video, as always, everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, that said, our biggest position is still GameStop. Market's going to open in 2 minutes, 45 seconds, and we'll get updated quotes for the 6 covered calls that we wrote. It's going to be interesting to see if either this here is the beginning of a downward trend, or if this was the entire correction in some form, A, B, C, and we're therefore still getting another push further up. If we were to get a push further up, I would expect that we would see today already a rise, in which case I would probably already roll my call options. So try or check at least if I can roll them out by maybe 1 week and a higher premium or and a higher strike price to, on one hand, pocket additional premium, and on the other hand, increase the profit that I make by the shares if the upward trends continues, or like if we then see a decline as I'm expecting, be able to basically keep my shares and not have them called away like marginally above 30. So we'll see that asset in roughly 2 minutes, how the market opens in GameStop, if we get some upwards movement, how it affects the premium for, or the cost for the call options that I wrote. So if I can basically roll them profitable or not. So moving on, for now at least, Barnes & Noble Education Inc. Here, as said, I am relatively certain that we hit our bottom, so that we should go further up from here. We had 1 or 2 big candles here, but then retraced again. We'll see how things continue, but overall, I'm still bullish on that one. So we'll hold our few shares. How many do we have there? BNet only 49, and there are also options in BNet. So if we roll our calls, our covered calls actually, we would probably use the premium to buy more shares here to basically also be able to sell covered calls against that position. And outside of that, we would do the same in immersion, so where we also expect further upside. Here we also would like to increase our position to around 100, or not around, exactly 100 shares, so we can sell covered calls against our position. And but we'll have to wait and see. Overall, still bullish. Therefore, costs I'm also bullish, but we are still waiting for months already for a breakout to the top here, or to be proven wrong by crossing to the bottom here. NEO, we're still bullish. There we have our 100 shares. We sold covered calls at the 7 strike price to make a little bit of premium. This would be our minimum target, 676 for the move here. So we'll have to keep an eye on this. Obviously, if we were, or if the price would start to move down here, also the price to close out our call would drop. 1 second, I have to refresh that there for a second. Okay, that worked. Okay, just to be sure. Yeah, okay. Yeah, so overall, as I said, still bullish, still think that we'll have more upside here. Bringing us to Novavax, where we might have the beginning of our third wave, but it very, or not just very likely, almost guaranteed will not be enough, because our options expire on the 17th, which is around 2 weeks from now. Therefore, we will not get enough movement. However, if or when we break the 1074, we would consider increasing our position, assuming that we have disposable money at that time. Yeah, looking into crypto, Bitcoin moving up a little bit. So it looks like we indeed had a short third wave for this corrective pattern. I'm honestly still having trouble, unless we're looking, no, like, doesn't make sense. So we would need to, the most likely scenario is probably that this here is a fluke, that our correction, so this candle here is some kind of fluke, that our correction actually finished here, like we originally assumed before we had this on the chart, and that we therefore have some form of 1, 2, 3, 4, again this candle, or 4 till here, and then wave 5, and therefore our correction here would be fine, and we would now get 5 more waves up. I have to keep an eye on it, but yeah, like, so especially since we 99,887, and here we already went to 99,888. So since we already went higher than here, it's, yeah, like relatively certain, or I'm relatively certain that there's more upside now to come. So we'll hold our Bitcoin position. XYO, as said, theoretically, the correction could be over, but we don't want to shift our Bitcoins holdings or our small Bitcoin position into XYO yet, because I see more I see upside in Bitcoin. I also see more upside in XYO, but if the correction hasn't fully finished yet, we have way more risk here than we have in Bitcoin, so we'll stay in Bitcoin for now. XRP should still move sideways and down, so we'll keep an eye on it. Storage or Storj should move up. We have our take profit at 80 cents. We might move it higher as time goes by, depending on what happens, but I'm still bullish here. HNT, I'm still bullish here as well, even though we might temporarily go down a little. And Algorand is the last one, where we potentially finished our retracement here and should now most likely get to see our next 1, 2, 3, 4, 5 further up. And yeah, that already covers all of that. Now the big question is obviously for us GameStop and how our premium. So today we originally got $2,800 for the 6 covered calls, and if we close it out right now, we would have to pay back $1,800, which means we would have to strategy builder, buy back those 6 calls, and on the other hand, basically sell new calls, which also means we would have to roll them out, so at least a week, since they are up to 310, which means we might be able, yeah, we can see that we could roll them, for example, potentially to no, there's still a debit. So we could roll them up by, let's see, 31.50. If we only roll them a week, no, still. Okay, we could roll them up by $1 plus minus 0. So apparently without having any cost, which would still make them in the money. It would buy us a week unless we get unless they get assigned early, and it would also secure us an extra $600 in profit, which means technically while we wouldn't earn any credit, if GameStop stays above 30 or 31 in that case, we would lock in at least $600 for that extra week. Now the question would be, if we go further, so instead of January 24th, we go to January 31st, so we would give away 2 weeks. However, that would also allow us to roll them to, for example, let's see, and not that much higher, so 33, 32, yeah, so we could roll them to 32, pocket $150 in credit straight away, and if GameStop stays above 32, or right now it's slightly below, yeah, so right now we are at 31.90. If GameStop stays above 32, we would then therefore pocket an extra $1,200. So again, we technically would be able for 1 week to pocket another $600 in profit if GameStop stays at the current price levels, and for 2 weeks, either if we stay below 32, keep our shares, or if we end pocket 150 in credit extra, or if we stay above 32, pocket 1200 in profit extra, and the 150 in credit. Yeah. Now, if we go much further, it's a little bit tricky because then we're already looking at February 7th, so we would have to add 3 weeks basically. And if we do that, we can see that we could roll maybe to 33. Let's see, 33 would still be a credit. 34 would already be, would also still be a small credit. So we could then roll to 34 for $120, $130 credit right now, plus again then basically for up to $2,800, $2,400 in extra profit if GameStop then in February would be above 34. Honestly, not sure what would be the smartest play here. Visually, however, one has to consider that it's possible that we finished an A, B, C move here, and that we are here now about to get our 1, 2, 3, 4, 5, and then next correction that we basically are about to get 5 more waves up. Question is, what would be, if that's the case, what would be our profit target, just to try to get a number of like how far we would have to roll them if we want to keep our shares. And the minimum target would be at 34.03 that we already reached here. But considering this, we might actually expect that this is basically 1, 2. So our maximum target would be relevant, and the maximum target would be at, now where are you now? So at 40.52. Now, if we want to roll to 41, basically, so to ensure we keep our shares, so maybe till 40, we probably even here, so sell leg. Yeah, even if we roll it to February 21st, which basically adds another week, another month to the expiration, we would have to pay a credit. And the next date then after February 21st would be already the March expiration. And the March expiration, we probably get a credit. So we would get $600 credit, but we would have to roll them out until March. Although it also would secure us a potential 6,000 extra profit if GameStop indeed makes it above 40 by then and stays above then, or it makes it above 40 and whoever buys the calls exercises them. Yeah. So on the other hand, if we just roll them a little bit in quotes, we can always roll them further. The question is if we will be able to do so. If we will be able to do so for a credit. The big challenge is, in quotes, that if we roll them till March, I mean, we could still roll them back, but also, yeah, no, like rolling them back would not work unless we give money back. So if the price drops, the calls get cheaper. Unless we also roll them down then again, so that might work, but most likely only for debit. We might be able to roll them to February for a credit, or for plus minus 0, which however doesn't really help us much. It just would mean, I mean, of course it helps us if GameStop takes off, because it locks in, or it would secure 6,000 in extra profit, which would be around 30% return. Although, I mean, here we were in October, and from October to end of October, so wave 1 here took, okay, if we assume that wave 5 is similar to wave 3, then we would expect actually to hit there by January 17th or January 13th. And that's assuming that the pattern is 1, 2, 3, 4, and 5, so 5 in progress. And let's ask the 8-ball, will GameStop go down from here? Will GameStop go down from here? So to clarify, will we continue a movement down like I originally expected? So will GameStop go down from here? As I see it, yes. Yeah. So the 8-ball always tells me what I want to hear. I think we only had it once that it disagreed with me in the last couple of weeks. It's obviously tempting to say, okay, let's roll them out, especially for free, but we would have to roll them as said to, what was it, April. So we can see we would have to roll them out to somewhere here, which is a lot of time where we wouldn't earn any premium because we couldn't do anything. Only if GameStop drops, we could then maybe close out those calls or roll them for shorter expiration but lower strike price to, again, maybe for a credit, but only with some luck, in quotes, most likely. Obviously, if we wouldn't spend the premium, it wouldn't help either because we obviously don't get as much. So even here the premium would be $270, $275 per option. So we'd need $1,500 in liquid cash to close out those if we want to close them out completely. And that's honestly, it's like, yeah, I mean, it's a nice problem to have because we are looking at profit. So I'm going to zoom in a bit, yeah, and then just scale this back like we had it before. So I mean, the pattern would suggest that we have 1, 2, and then here we have 1, 2, 3, 4, 5. So for 1, 2, 3, and then that's wave 4 as A, B, C, technically finishing here. And then we have, so the pattern would suggest that we're in wave 5, but then in wave 5, we also already have 1, 2, and we hit the minimum target. Let's not forget that 1, 2, 3, 4, and 5. So if we rely on the, in quotes, moving or overlapping moving averages or difference between moving averages, it would stand to reason that actually wave 5 finishes here, yeah, which again, I'm not happy with this correction and especially not the candle here at earnings, but that would be the assumption here that this here is already done. And then basically that correction here would have finished, or let's see if I can move that from here. Yeah, so it would be something like this. Yeah, so if that's the case, we would right now not have a flat correction, so we could remove this. We would need those profit targets here, and we would not need this. And we would, however, then say that we are now, so that would go back here, and we don't need the extra levels, but would have an almost 50% retracement in wave 4, and would now say that we are actually expecting to retrace this 5-wave move, which means we would now expect the retracement down to at least 28.11 in the form of 1, 2, 3, 4, 5, A, B, C, and then another 5 waves. Yeah. I think we'll stick with that assumption. That we don't need because we already broke it. Yeah. And then basically, what's that? That's, hello, what's this? That was to indicate if this is the 5th wave identical to the 3rd wave. And what else? Then if we use Kennedy channeling technique, however, might not be, or it might also check out. So if we take 0.2, we take our expected 0.4 and the parallel through 0.3, then we expect wave 5 to reach the median or the top. We went above the median, we didn't reach the top of this channel. So even Kennedy channeling technique would theoretically be okay with the assumption yeah, I don't fully see where the top of this candle is, but basically that would be our deceleration trend line. The breakout would indicate wave 5, and here we hit the target for wave 5. So I think we're going to stick with it and not roll our options, because this way by January 17th, we should be below 30 again. And we still have the shares, which will allow us then to sell new covered calls. If despite that we actually end up going further up right now, we would simply adjust as needed and still maybe consider rolling the calls if we can do so for a credit. So to roll them out a week or two. And I think once the new expirations are going to be available, so once we have more expirations below February 21st, so that there is like more steps between February and March, we might also be able to roll them properly. It's important to consider that only if we go above $34.80 do we actually start to miss out on profit, because we earned $480 in premium for every 100 shares, which means that while if we are above 30 and the shares get called away, we obviously sell them at 30, but we already got compensated for up to $34.80 as well. So only if we break that mark would we start to really miss out on profit. And between 30 and $34.80, we technically are just, in quotes, giving back some of the premium, because we sell our shares at 30 and could have sold them a little bit higher. But again, we already got that premium, yeah. I think we're gonna keep it like that. I know it's unchanged in every episode for the last week at least. I've been considering my options in terms of should I roll them or not. If we were to roll them, we probably would only do so if we get an upwards movement and it hits the upper Bollinger Band, to potentially have a higher premium that we get. Although it also makes our current calls more expensive, which means buying them back becomes more expensive. But I believe as long as we stay below $34.80, where they are not even break even yet, we still should be able to realize some profit on those calls. And again, if we then roll them further, roll them for a credit to pocket additional premium, while also ensuring that we are able to lock in a higher profit if the rally continues. Right now, the way it stands is that, while I shared the opinion that this might be a flat correction followed by a move down, if we consider how long this has been developing, it actually makes more sense to assume that this is 1, 2, 3, 4, 5, and that we are now about to see the corrective pattern downwards. Doesn't mean that we couldn't see an ABC up here somewhere to 33 or so, but then we should actually see further downward movement. I guess that's it for today. However, there's not much else to consider as long as we're tied up in that position and don't have available cash. And the few other, we only have in NEO a covered call, but that's till April, since otherwise there would be no reasonable amount in premium, considering that we want to only have them called away at a certain strike price. So the few other things we have are not big enough to worry a lot about it. So it's really about to manage the most or make the most out of our GameStop position. So since there are also no questions in the chat, I'm going to say thanks for stopping by. No matter, I hope you were able to take something away from today's stream. And as always, don't forget, let's switch back here to like, subscribe, and enable notifications so you don't miss out on future videos and live streams. And with that, I hope to see you then tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.